Welcome back. Let's now take you to the very latest in the world of business. Local trade will be hoping to maintain last week's gains at the start of this week. The JSE ended firmer on Friday, while global markets were mixed as investors digested cooling inflation in the U.S., with analysts cautioning that the risks remain. Bianca Botes, Executive Director at Citadel Global, joins us now to talk through the latest market indicators. Bianca, very good morning to you. Thank you for your time. Give us an overview of how the rand is faring this morning and what factors are likely to sway its trajectory this week.
Good morning to you and the viewers at home. The rand is trading steady following its rally against the greenback last week, once again setting its sights on a potential break below the 18 rand mark. There's a lot of focus this week on the performance of the Chinese economy, where strong growth will likely support commodity prices, and that will result in strong performance for commodity-linked currencies such as the rand. We will also continue to monitor interest rate expectations from central banks, and in particular the Fed. And like you mentioned earlier, that will be dependent on the growth in the US, but also that key inflation number that we keep monitoring, and that will really give us a sense of what we can expect going forward, what the Fed will do, and how currency markets will continue to perform as we continue down the road for the rest of the year.
Locally, Eskom ramping up load shedding to stage 6 and concerns about the country's deteriorating terms of trade and portfolio flows remaining negative are adding to global recession fears. Is the state of South Africa's economy at risk?
The local economy is expected to grow at a mere 0.1% this year, with Eskom being the biggest reason for this dismal performance. This, coupled with slowing global growth, certainly does not bode well for the local economy. However, at this stage, it seems like we would be able to avoid a recession this year. The finance minister also reiterated the government's commitment to bring emergency energy supplies online at the recent IMF spring meeting, and he also shared the sentiment that we might be able to avoid a recession. So currently not looking at a recession, but really dismal growth, and it's not too optimistic on the ground in South Africa at the moment.
We also know that Stats SA will release the inflation figures this week. Our headline CPI has generally been heading in the right direction. Do you anticipate any surprises there?
We don't expect any surprises on the inflation front, and we expect to continue seeing a steady decline in terms of numbers. We anticipate inflation to dip to 6.9% from the previous 7%, while core inflation is expected to decline to 5% from 5.2%.
And Stats SA will also release retail sales for February on Wednesday. Sales are expected to have contracted. What will the data tell us about consumer spending patterns at the moment?
The data is likely to tell a story of what we already know. A consumer that is significantly under pressure, a decrease in spendable income, rise of living expenses. So we are expecting a subdued reading in terms of retail numbers. We're expecting only a marginal growth of 0.3% year on year in terms of retail sales, and actually a contraction on a quarterly basis.
Very well. Thank you so much for that business update. Bianca Botes, Executive Director at Citadel Global, giving us the very latest on how the markets are faring.